All right. Let's start off by, I have a few things I want to close off just to speed up my computer. And I think we should be good to go. Yeah. So we have questions that we're going to look at the end. Okay. Let me see. Anybody? Abdul Wahab, are you there? How are you, sir?
Hey Kevin, how are you?
Good, good. And you?
Very good, very good.
Good, good. So you like the power of supply and demand for day trading, do you?
Oh, man, it's amazing, man. It's overwhelming for me because
Hmm.
I start doing it I'm still new to it. Maybe 3 weeks ago,
Yeah.
uh, it just overwhelmed, and because I'm still learning, and there are so many. So,
Mm.
but
Yeah, I
definitely,
wish I had a team of people working with me because there's so many projects I got on the go right now that it's just overwhelming, just the amount of work. But I've talked about some plans that I have to expand the school, and really the reason that I want to expand is to reach more students and to automate things so that I could be more focused on the classroom sessions, the lessons, because there's a lot of stuff. There's a lot of stuff I got planned to come out. And, with the interest of day trading, I think it would only make sense to eventually have something geared towards that. Because, yes, you're right, there are a lot of opportunities. The thing is, as a day trader, if all I did was trade and sit in front of my computer and trade all the time, I would be a day trader. I would day trade, I would swing trade, I would take all sorts of trades. Wherever the opportunity is, I would do it. But day trading takes a lot of work. It takes a lot of work because you got to be looking at charts a lot, right? Because you're looking at lower time frame charts, and things can produce. The charts can produce a signal really, really quickly. But there's a lot of power in day trading, a lot of power because you got a lot of trading opportunities. And if you know what to look for, and this is what we're here to do, is to teach you what to look for, because there's a system, right, that we're following. There's a very, very specific system that we're following on how to locate trades. And so if the system works for looking at the monthly, weekly, daily, and 4-hour chart, it's also going to work for the weekly, daily, 4-hour, and 1-hour chart. It's the same concepts, right? The same thing
yeah,
goes for if you were to look at a daily chart, 4-hour chart, a 1-hour chart, and a 15-minute chart. You can use the concepts for the same thing. So, euro, US dollar, here, we were looking at this in class the other day. And so the thing about day trading is that if you know how the markets move and what is to be expected, then it's very easy to time entries on lower time frames off of those zones. Okay? Becomes easy because you know what to expect. And all you have to do is wait for it on the lower time frame and then you go in. But if you don't know what to expect, day trading is a nightmare. It's a nightmare. And the reason why it's a nightmare is because you'll get into a position, then it'll go against you, and then you'll think, oh, maybe if I just add another position because my analysis told me price should move in that direction, and then you got 2, 3 positions that are going against you. Now your emotions are being triggered, and then you're a disaster. But if you know what to expect, if you know that price is going to react from a specific zone, then you will know what time frame to switch your charts onto and look for the trading opportunity. So the euro, before we get into the homework, um, you guys interested in me going into this a little bit more? Just a show of hands if you are. If not, I'll just wrap it up and get straight into the class. Yeah? Okay. So did you guys read the report that I sent out yesterday? The news? Show of hands if you did. Good. So in the report that I sent out, one of the things that we're going to be doing in level 3 is, like I said, Sherlock is a system. The way that I built Sherlock was to have an answer for every market situation. No matter what the situation is, Sherlock gives me a high probability of what the market's going to do. So because of that, it can be very complicated to know what the market's likely going to do all the time. It becomes very complicated, and we went through this in a class last week, and the students were like, "Whoa, that's super complicated." Well, it is super complicated, but because trading is my life and this is my life, I don't mind it being complicated. But not everybody who comes to the school wants things to be complicated. So if you don't want things to be complicated and you want things to be simple, there's aspects of Sherlock that you can take on and just use. Like, let's say Sherlock has 100 different trading signals that can be produced on the chart. Well, 15 of them are easy to find. 20 of them are not so bad to find, and the rest of them are, or the 25% of them is maybe a little bit difficult, and then there's 30% of them that's extremely difficult to find. Those extremely difficult to find ones, sometimes they bring in the best risk to rewards on those type of trades. But your amount of knowledge and skill has to be really high up there to find those type of trades, and it requires a certain amount of work, a certain amount of hours putting into technical analysis. So it depends on what you're willing to commit to and where you want to go. If you don't want to take those extremes and you just want to trade, you want to be a swing trader and you're only looking for 20 to 25% a year, then there's a certain amount of work you have to do, and there's a certain amount of trades that you have to take, depending if the market conditions are right. But you could take 20% of the trades that Sherlock would suggest based on what market dynamics are in play, what forces are in play, what trends are in play, and you can incorporate that into your trading style if that's what you want. And you can keep it very simple. So in level 3, what you're going to be exposed to are the rules, are what zones, what trends, what forces need to be on the charts for you to take a certain trade. And if you like that, if you like those type of trades, then you write it into your journal and say, I like this type of trade. So from now on, I'm going to be looking for these type of trades. And so you can apply that same concept to day trading. The thing is that to be getting into day trading, you need to have a good understanding of how the markets work. Otherwise, to locate that needle in the haystack, you have to have a magnifying glass and you have to know in what area you should be looking. Otherwise, you're never going to find it. And so that's the thing about trading with supply and demand. To get straight into day trading when you first join the school, forget about it. It's like you're trying to master algebra when you don't know how to add 1 plus 3. That's the disaster that you're going to be facing. But the power of day trading is using what Sherlock has to teach you about trading is unimaginable. So I'll give you an example. So the monthly chart of the euro, we've discussed this many times. Okay, the monthly chart of the euro is stuck in a range. Okay, because we've got supply here and we got demand down here. Okay, so you could see that it's stuck in between two zones, and it's just going to be bouncing up and down. Okay, so we were discussing this in another class. This is higher level stuff, but this is what you guys are working towards. What we were talking about was how Sherlock can predict the movements within the range here pretty accurately. Okay, we need certain things to be in play for Sherlock to be able to accurately forecast how price is going to be playing out in between this range, but it's pretty darn accurate. So it was playing out, and I mentioned this in the latest Arujo report about these cycles that were playing out. And so what was to be expected was price in this later phase of this ranging was that price was to rally up, hit a daily supply zone, and then drop. Okay, so let me bring up the daily chart. And we had to adjust the analysis here because originally I had a supply zone here and it was taken out. And then later on, I was looking at it and I was looking at that and I said, no, that's not supposed to be a supply zone there. So I sent an email out to some of the students who participated in this class and I said, I want you guys to examine this and tell me what you guys think. And later on, we talked about it and discussed why that wasn't a supply zone. So we ended up taking out that area of supply, which created this being the supply zone and this being a demand zone. Okay, so now if you're a day trader or if you're a swing trader, okay, here's a daily supply zone and here's a daily demand zone. So based on what Sherlock was suggesting that this move coming from these lows here, right here, price was going to want to rally up, hit a daily supply zone, and then drop. That's what Sherlock suggested. And so far, everything else, everything that was playing out in the chart was playing out exactly as Sherlock was suggesting it would. So this rally up into the daily supply, we were expecting a drop from there. But as a swing trader, what kind of a trade are you going to take here? You're getting in short here and you're exiting here. It's not much of a move here. So it's not really worth it for me to capture a move like that. Okay, if you're going to be taking that much risk, you know, that's like just a little bit more than 1-to-1. But here's the thing. Applying this Sherlock system to this chart, if I wanted to trade this, if I was a day trader and all I did was day trade, you could have definitely taken a trade off this daily area of supply off of a 1-hour chart. Okay, so let me show you how that works. So let me switch this daily chart into a 1-hour so we can still see where that daily supply zone was. So basically, getting back to this, what was expected was price was going to drop from supply and hit this demand zone. That's what was expected. So remember that, dropping from supply and hitting demand here. Okay, so now let's switch over to a 1-hour chart. And let's go back to that. Here's the daily supply zone now, okay? This daily supply zone is this one here on this 1-hour chart. So the idea is we'd want to get in on a momentum shift on the 1-hour chart as price was reacting from this daily supply. Okay, so let's take a look here. So we look at this chart and the first thing I see is we have a trend line here. Oh, that's too thick. Let me make it thinner. That's the first thing I see here. Right there, okay? You guys see that? That pretty much stands out, okay? Very much stands out. And so what is a momentum shift off of a higher time frame area of supply? It's a break of a trend line or opposing zones being taken out and price reversing and going in. So let me just move this back a little bit more so we can see this. So I'll take a look here. Okay, that's the trend line. That trend line broke here, producing a supply zone right here. So your entry to get in short would be right here. Right there. So here's your entry. Your stop loss would be above that supply zone. Look at the drop that took place. Okay. So let me show you that in terms of risk to reward. Okay. So you put a stop loss above the zone, entry just below it, like that. So again, stop loss here, entry just below. So you're looking at 1, 2, 3, 4, 5, 6, 7, 8, 8-to-1 trade until the opposing zone got hit. Okay, that would have been your entry. So is that a good trade? I'd say so. I'd say so. Amazing. So that just goes to show the power of supply and demand and knowing what to look for. That's an easy trade. 1 hour chart, momentum shift off a daily supply zone. So yes, is it powerful? Extremely powerful. Extremely powerful. Wait until the market breaks out of these ranges, and you have trends, and then you're taking lower time frame chart momentum shifts off of 4 hour zones, daily zones, with projected larger moves. That's when things get a little bit more extreme. So just wanted to point that out to you. So yes, it's powerful, but it takes time to get to that level. You can't just get there overnight. It takes a lot of time. So that's what we're teaching here. We're teaching you that system. It all starts in level 1, knowing how to find the zones and the trend lines. Because if you don't know how to find the zones and trend lines, you have no chance. You have no chance in hell to be able to day trade. You would never know that supply zone even existed. So how would you know to take a 1 hour momentum shift off of it? You know? So if you don't know how to do the zones or the trend lines, forget about it. You'll never get there. But once you are proficient in doing that, then you come into level 2, then you start learning about structures, about trends, about ranging, about all the other little nuances about the supply and demand and the trend lines. When you graduate there and you have a good knowledge of that, you go into level 3. That's when we start talking about the multiple time frames. Okay? All right. So, any questions? I saw some hands up before, but they all went down. Yeah, class has started, my friend.
Kevin, can I make a comment?
Yeah, sure.
Yeah. Perhaps because I just started doing this by myself, so yeah, I have to spend hours and hours on this, and I think if you want to cover the whole pair and look at the whole market, it's too much. I mean, even when an individual full time will not be able to cope up with this. But perhaps down the road, you might want to consider an intraday level where you introduce it in some sort of an examples. Maybe focus on some pairs that are, that are that can be trade more, pronounced, and then the student can chip in and start chasing those in trade and publish it in the website
Mm-hmm.
and something
Yes,
like that. But honestly, one
that's
person is, yeah.
that's the goal. Well,
Yeah.
listen, are there trading opportunities every single day? Probably yes, depending on what time frames you're looking at. But I mean, I'm only one person, so there's only so much I can do. But
Yeah.
the power lies in having an army of people looking for the same thing. If I had 20 students who were extremely proficient in supply and demand, market dynamics, understanding how to look for the trades, and they have their systems in place, then I could have one student looking at the Aussie pairs, another one looking at the Euro pair, another one looking at, the pound pairs, looking at just the smaller. But and maybe it'll get to that point. The point is that that's the whole that's the whole plan, is to get you guys to a level where you're proficient at finding the trades as well, looking for the momentum shifts, knowing what to look for, because there's so many variables involved in trading. Okay, if the monthly's in an uptrend and the weekly's in an uptrend, then there's specific trades you have to look for. But if the monthly's in an uptrend and the weekly isn't in an uptrend, then there's a different set of trades to look for. So to keep track of how many pairs we trade and all these specific variables, I mean, you got to be all over the place all the time. I'll tell you one thing. If I ran a multi-billion-dollar hedge fund, what I would do is I would train people like I am right now with you guys, train you to know what to look for, become proficient at it, and I would have one person looking at one chart and making sure that the zones are perfect, the trend lines are perfect, and that's it. One person for the Aussie US dollar, one person for the Aussie CAD, one person. This is what I would do. And be focused, making sure that the trend lines are legit, the zones are legit. We'd have meetings where we'd examine the charts, make sure and go through, make sure all the zones are proper, the trend lines are proper, the analysis is perfect, and the opportunities that we would find would be incredible. Because in my opinion, and I'm sure you guys believe it, in my opinion, there is nothing more accurate than trading supply and demand. And on top of that, knowing how the market is going to move before it moves in that direction and knowing what the odds are, the way that we're doing it. In my opinion, there's nothing more accurate than that. So, but it requires an incredible amount of work, an incredible amount. So there's no, there's nothing, nothing that's good is free, right? It comes with work. And so, but the amount of work is just incredible. So ideally, I'd love to have an army of people that, we could all look at these charts and we can all find it. And that's what I'm trying to build here, so that you guys can look at the charts and say, hey, Kev, and you post your trading opportunity on the forum. Hey, Kev, guess what? Aussie US dollar. You just mentioned the COT report. They're accumulating longs, right? So it looks like it's going to be going up. We have demand in play. Okay, so here's the deal. Let's take a look really quickly before we start this class. So the Aussie, I would love for a student to say, hey, we have demand in play, right? Okay, so we have downtrends on the monthly, weekly, but we're starting to see momentum shift to the upside. Price just came off of a daily demand zone here. Momentum is moving to the upside. I think we can look for a trade on the lower time frame off of a 4-hour demand zone. Let's see if we can do it, and then opens up a 4-hour chart, locates the demand zone that price is coming down into, momentum shifting to the upside, drops it down to a 15-minute chart, and then opens it up and does some analysis on it. Was there a trade signal here? Let's take a look. Let's see. Trendline break right there. Look at that. Bada boom, bada bing. Look at that. Demand zone, momentum shift. Price moves up, comes back down. Away she goes.